Welcome, everybody. This morning, what I'd like to talk about is exiting the trade. I happen to believe that the exit is almost more important than when you enter. And you always have to have a great exit strategy in place even before you do enter a trade. My name is Dale Brethauer. I've been a trader for 35 plus years, hedge fund manager, been a guest speaker at a number of platforms, and have written 3 financial books. I am the founder of www.optionsinfinity.com, which I believe is the very best option education website available today. We focus on credit spreads. However, we do talk about financially strong stocks and when to get in and out of them. We do look at Forex because what I teach is basically good in all markets. Right now, I get a big kick out of teaching. I'm not a teacher that doesn't know how to do. This is how I've made my money, and I'm at the point in my career where I get a kick out of giving back to the community. Now, if you look in most of the stock market literature, you're not going to find much about exiting the trades. Everything's focused on the trade entry. Like I said earlier, I think exiting trades is what defines your success. It sometimes is more important than when you enter. The old adage is you want to cut your losses short and let your profits run. Well, a good exit strategy, it will help you to do that. It'll help you to do that. And let me just see here because my Alex, good to hear from you too. One of the nice things about having a good exit strategy is, when should you take profits? When should you exit because the trade's going against you? Because the trade doesn't always go in your favor. I mean, you can analyze it and know that all your indicators are saying this is a good trade. This stock, this option is going to go up, and you put your trade in, and lo and behold, it goes the other way. What do? Okay, you have to have a strategy to decide when to get out. Okay, let's say it goes with you. You have to have a strategy to know when is enough, when you have made enough profit. When is it time to take that profit? You don't want to take it quickly. You want to let it run, but there comes a point where it can be overextended. Now, these are 2 of my exit strategies. The first one is if you are in a trade and you get a measured move that goes opposite the trade. I am going to explain exactly to you what is a measured move. And when you have a trade on and you get a measured move that goes opposite the direction that you have your trade, you just exit the trade. That's when you get out. On the other hand, you want to let your profits run if it's going in the direction you want. And what I use there are Fibonacci extensions. And I'm looking at the 127%, the 161%, and I can preset these. If I have a measured move that's going with me, I can preset these and I'm ready to book profits when it gets to that point. Okay, I'm going to explain measured moves. I'm going to explain Fibonacci's. But before I do that, I just want to show you an experiment that I run. I run it all the time. It's not always 100% correct, but I want to show you that with a good exit strategy, you can make money independent of the entry. Let's take a look at the SPY over the last 2 years, and you can see the market has been bullish. And this is even with the coronavirus scare and how it knocked the market down. The market still remained bullish. So for my experiment, what I wanted to do is I'm going to take 3 random dates and 3 random stocks, ETFs. I even have a Forex in there. And I'll show you that I can make a profit independent of the entry. It's not 100%. Nothing in the stock market is 100%. But I think you'll be surprised to see the power of knowing when to take profits, when to take a loss. So I'm going to pick random dates back here, and I'm going to put on a bullish strategy. And let's see what happens. Okay, the first one I looked at was Amazon. And on Amazon, what I looked at was on, you might not be able to see this real close, but on March 23rd of this year, March 23rd of this year, the Amazon was right here, okay? So Amazon was kind of going sideways. Well, in less than a month and a half, I made 27% profit. And this was on the stock alone. And here's how I did it. Okay. This was my random entry point, 323.20. Amazon was at 1847. This is a measured move, and I'm going to go over this again. But a measured move is if you have the price coming down, it makes a low, then it goes up, makes an intermediate high, pulls back, but makes a higher low, and then it makes a higher high. That is a measured move to the upside. It's a measured move to the upside. Just the opposite is true on the downside. If the price is going up and then it pulls back, it makes a lower high and then makes a lower low. That's a measured move to the downside. This is a measured move to the upside. And once I have that, most trading platforms, I use Thinkorswim. I'm not affiliated with them, but I happen to think they're one of the best charting platforms available today. You can automatically put in Fibonacci extensions. And I kind of focus on the 127, 161. If it's going to go to up here to the 127, it usually, if it goes blasts through there, it's usually going to go to the 161. Okay, these are good places to take profits. This is a good time to take profits when the market is going with you. Okay, I exited this one at 161% on the Fibonacci extension, about a month, not quite even a month, at 23.46 for 27% profit. Now, if this would have come up and then come down and made a measured move to the downside, that's where I would have exited. But this one did not. This one kept going in the direction. I had a bearish, I bought Amazon, and therefore the rules are, the exit rules are, when I get to a fib of 127, 161, to go ahead and take profits. And that's what I did. That's what I did. Okay, the next example I want to show you is the US dollar Japanese yen Forex pairing. Now, the random entry here was right here. That was on 2720. 2720. And that was before the big drop. Okay. And what I did is I bought the Forex pairing right here, not knowing where it was going to go. And I didn't have a measured move. I was sitting here in no man's land, okay? And I sat there and it kind of went sideways. And then all of a sudden, it made a higher high, then it made a higher low, and then it made a higher, it made a high, a higher low, and a higher high. And that is a measured move to the upside. Once I have that, I can put on the Fibonacci's. The 127 was right here. The exit was at 112. Now, I want you to look at how close that was. It almost came within a tick of where it was projected to go with the Fibonacci's. That's a 250 pip profit, which is a huge profit in a Forex trade. When I put this on, I had no idea. It could have come up here, it could have come down, made a major move to the downside, and I would have been out. Just so happened it made a major move to the upside. I took the profit at 127 and got out. You say, well, maybe sometimes you might be leaving some profit on the table by getting out at that point. Sometimes that is correct. A lot of times when it gets to the 127, 161, it will revert back, either consolidate or revert back. I want to get out when the move is in the direction that I'm in. Okay, my last random example is Costco. This goes back to August 5th of 19. Here's August 5th of 19. I had no idea. I said, I'm going to buy it because the market's been bullish. I'm going to buy it and let's see what happens. Okay. I bought it at 264. You can see it came up from the low to an intermediate high to a higher low, made a measured move. I was able to put Fibonacci's on here. It blasted through the 127. It went to the 161 right here, and I got out. I got out. That was an 11% profit on a stock, 11% in 20 days, 3 weeks. 11% in 3 weeks. And this is just buying the stock outright. If you would have had an option or a bull put on this, you could have done even better. Now, what I should have showed you was, you can see this is red right here. This actually came up and took a drop. This was a perfect time to get out. Yeah, it went up a little higher, but then it pulled back and then it finally went whoosh. So this was the perfect time to get out. Okay. How do you know when to exit? Well, there's 3 popular ways that I'm going to say are not the way to do it. Fibonacci's are the way to do it. You got the MACD crossover. A lot of people use the MACD crossover. A lot of people use a 3-day trailing stop. A lot of people use a 20-day or a 5-day or a 15-day moving average. All right, let's take a peek at those. Down here, I'm showing you the MACD crossover. So here's our entry point. All right, I'm going to take this entry point for everything. And I'm going to stay in here until the MACD crosses back over where there it is. There's where it crosses over. So I made 0% profit. I had a nice profit and then gave it all back. Had a nice profit and gave it all back, waiting for a MACD crossover. Let's look at a three-day trailing stop. You have a nice profit. You have a nice profit. You want to protect this. You go back 3 days, and if it goes below this point, you want to get out. Then up here you go back 3 days. If it goes past there, you want to get out, and that's where you want to get out, right here. Okay. You had a nice profit. You gave most of it back. You had a nice profit and gave most of it back. 20-day moving average is almost exactly the same. 20-day moving average, that you had a crossover right here. Okay. There's the MACD crossover. Here's the three-day trailing stop. Here's the 20-day moving average. There's the Fibonacci extension. Take the profits when it's going with you. The Fibonacci tell you when you are overextended. Okay, so let me tell you about what a measured move is and what Fibonacci's are. Two of the most powerful tools that I use. There's only four, there's actually only three that I use. The regression channel, which shows you when a stock is overbought, oversold. The measured moves and Fibonacci extension. I keep things very simple. My trading strategy, I've refined it to the point where it is so simple. And I think the simpler the better, because when something is simple, it's just a matter of you executing it and not trying to rethink, oh, what do I have to do here? What do I have to do here? You keep a simple strategy. And the three tools that I use are the regression channel, measured moves, and Fibonacci's. Okay, what is a measured move? Let me go over that again. A bullish measured move is the price is coming down and makes a low at point A. Then the price comes up to point B. I don't need that. Then it pulls back to C, but it makes a higher low, a higher low. Then it continues on up and goes past B and makes a higher high. This is a bullish measured move. Now, the classic definition of an uptrend is a string of higher highs and higher lows. So when you're in a trade, as long as you have measured move after measured move after measured move after measured move, you know that the trend is up. And then you can trade accordingly. Okay? Measured move to the downside. If you're going up and then all of a sudden it drops, and then it tries to come back up again, but makes a lower high, and then comes back down and goes below the B point and makes a lower low, that is a bearish measured move. The classic definition of a downtrend is lower lows and lower highs. So as long as you're in a downtrend, you will get measured moves, bearish measured move after bearish measured move. I think I have another question that came through here. Hold on for a second. Okay. My question box is really tiny, so I have to read this. Okay. How do you draw the Fibonacci's? Can you show me? Absolutely. Yeah, I can do that. I'm gonna get to the Fibonacci's in just a second. Hold on. On Costco, okay, I should have looked at this early. On Costco, did you buy at the yellow highlighted bar or the low at the fib. Let me go back and see if I can answer that question. Costco. This is where I got in. This was a random date that I picked. Okay, I was running an experiment just to show you if you pick a random date, you can profit or get out if you have a exit strategy. All right. All right. One more question here. Yep. Yep. Okay. I can show you a sample of that. Absolutely. Okay. So that's a measured move. All right. And here's an example of measured move on Bank America. These happen all the times. The price was coming down. Okay. It made a low. Then it came up. It made an intermediate high. It pulled back, but made a higher low. Not by much, but it made a higher low. Then it made a higher high. That is a measured move to the upside. All right. Once you have a measured move to the upside or a measured move to the downside, all you have to do is take the Fibonacci tool, click here, drag here, click here, drag here, and it's automatically put on the chart, and you will see something that looks like that. Now, this one went to the 261. I didn't even talk about that. The three that I look at are the 127, the 161, and the 261. Now, the nice thing about fibs are you can see that we had a big bar, we had a gap here and then a big bar day here. Okay. It actually blew through the 127 and the 161. When the price blows through the 127 and 161, it will usually go to the 261. And this is what it did. It went exactly to the 261 and then it dropped. Measured move, click, drag, automatically put the measured moves are put on. I have mine set to show the 127, the 161, and the 261. Let's see, I'm going to bring this over right now. I'm going to try to bring over my Thinkorswim here and show you real quick how to do this. Okay, let me see if I can bring this baby over. Minimize this, bring it over. Okay, here's a caterpillar chart. And what I'm going to do is, let's see if I've got, this thing is so big. Let me see if I can get this lower. There we go. There we go. Okay. Down here is this is Thinkorswim again. Here's the Fibonacci extension. Okay. So you just grab that. Now, the measured move on Caterpillar on the daily chart, here's the high. It comes down to a low. Click there and drag up here. Okay. And there is, it automatically puts on the Fibonacci. In this point in time, it didn't come down all the way to the 127, but what it did do is it came down to the regression channel. So remember I told you I have 3 tools that I use? Okay, let's go over here and see what we got here. Here's one to the upside. Click, drag, click. Okay, 127, bingo. What a good place to get out. Because, you know, it kind of blew through the 127. You might hang in there for a little bit, but then it kind of consolidated, and that's a good time to get out. And that's how you, it's that simple. You just grab the Fibonacci tool right here, Fibonacci extension tool, click, drag, click, drag. Okay. Okie dokie. Let me, okay, so let's see here. Fibonacci's. Let's talk about Fibonacci's. Fibonacci, first of all, the golden ratio, Fibonacci derived a number sequence way back when. And what he did is he added the current number to a previous number to get the next number in the sequence. If you look here, 0 plus 1 is 1. 1 plus 1 is 2. 1 plus 2 is 3. 2 plus 3 is 5, and so forth. You can take it all the way out here. 8 plus 13 is 21. This is the Fibonacci number sequence. Then what Fibonacci did is he divided this number, the preceding number, by the following number and came up with 0.61, and that was known as the root Fibonacci ratio. And then later on, mathematicians, of course, wanted to use the square root of that and square it. And then later on, they looked at the reciprocal of that. The reciprocals is what you use for extensions. Notice here's the 127, the 161, and the 261. They're all based on the Fibonacci number sequence and the root Fibonacci ratio. The neat thing about the Fibonacci's is they are seen everywhere. They're seen throughout nature. As you go up the stem of a flower, the leaves grow at the proportion to the ratio. The spirals on a seashell are in proportion to the ratio. The distance of your bones is proportional to the Fibonacci golden ratio. My forearm is from the inside the elbow, the crease, down to my wrist is 12.3 inches. My hand from my wrist to my forefinger is 7.5 inches. Guess what? If I divide 7.5 by 12.3, it comes up with the Fibonacci golden ratio. So are all your major bones, et cetera, et cetera, et cetera. Now, doesn't it make perfect sense that the market would move in perfect harmony with nature? What fuels the market? Fear and greed. Fear and greed. I have used the Fibonacci's for a long, long, long time. And what I would like you all to do is to play around with this. Go into any charts, go into a lot of charts, put on a measured move, find a measured move, put on a Fibonacci, and prove to yourself how amazing they are. Okay, can you show us how to install the regression line? All you have to do is go in under Edit Studies, and under Edit Studies on the left-hand side, you scroll down and you look for Standard Deviation Channel. Standard Deviation Channel. Double click it, make one 2 standard deviations, and the other one 1 standard deviation. And if that doesn't work for you, Thinkorswim's got a great help desk. Not only that, but you send them an email, they will get back to you immediately with exactly how to do that. Okay, Fibonacci extensions may be seen in any time frame, any market, any movement up or down. It's very powerful. So I'm going to show you a couple of things. I'm going to look at a week's chart with Amazon. I'm going to look at a daily chart with the SPX, Standard & Poor's 500. I'm going to look at a 30-minute chart for the US dollar Japanese yen pairing. So the first one we got here is a week's chart with Amazon. Okay, so the first one we're looking at is all the way here on the left-hand side. We've got a low here, then it comes up, makes an intermediate high, then makes a higher low, then a higher high. That is a measured move. Fibonacci say there's the 161. I can't fudge these. Is that incredible or what? Is that a beautiful time to get out? Then you have a measured move to the downside from here to a low to a lower high to a lower low. And that takes you all the way down to the 261 here. Notice you blow right through the 127 and the 161. And also notice that you're leaving some on the table, but boy, you're grabbing the lion's share of it. Then you get another measured move, and that one takes you almost to the 127. Not quite, but that was a heck of a nice profit right there. Actually, it did go to the 127, but it had to go through a couple of gyrations before it got there. And then here's another measured move from the low to an intermediate high to a higher low to a higher high, 261. Get out, get out. Look what happens. Get out, take your profit, whoosh. Get out, take your profit, whoosh. Get out, take your profit, up it goes, okay? Measured moves and Fibonacci's. Couple those with the regression channel. Use those as your exit strategy. If it gets to this point, get out, take your profit. If it gets to this point, take your profit. Yeah, you might leave some on the table, but that's okay. That's okay. Look at what you got. Look at what you're getting. And you're avoiding this. All right. All right. That's on a week's chart. Let's look at a daily chart of the SPX. Here's a measured move. Yes, this is a higher low, and it doesn't make a higher high till this gap over here goes to the 161 almost within a tick, hits it right here, and then heads on down. Makes another measured move, goes down to the 161, goes a little bit further, makes a major move to the opposite side, up you go to the 127. Look how accurate this is. Look at the 161, look how accurate that is. Look at the 161 here. Yeah, you're leaving some on the table, but good grief, look at what you got. Look at how accurate that is. That's on the daily, the SPX daily chart. Okay, let me see, I got a question here. The Amazon chart is a week chart, right? Yes. No, it's not the, you say, is it a weekly chart? No, it is not a weekly chart. It's the week's chart. Okay. Don't want to confuse this with the weekly options. This is a week's chart. Notice up here, I say it's a 2-year week chart. So every one of these bars is a week's worth of price movement. Okay. Now remember what I told you is that it can be used at any time frame. So I'm showing you the longer term time frame, the week. Then I'm showing you the SPX, the daily. Then I'm showing you I'm going to show you the 30-minute chart with Forex. Okay. So I'm hitting any time frame. I'm hitting any market. And you can see that I've used this with it going both up and down. Very versatile tool. All right, there's the 30-minute on the US dollar Japanese yen pairing. Okay, so the far left, we have a measured move that comes up here, high, higher low, higher high, 127, bingo, take your profit. And it pulled back and it headed back up a little bit, but it made another major move to the downside to the 127 right here. Then it made another measured move to the upside to the 127 right here before it turns around. Now, remember, with the Fibonacci's, if it goes to the 127, it's either going to consolidate, pull back, or blow right through it. If it blows right through it, you can say you have a good probability it's going to go to the 161. Most of the time, I use the 127 to take profits. Most of the time, I'm willing to leave some on the table to take the 127 as my profit point. And the beautiful thing about this is, as soon as you have a measured move, let's say you're watching this and it comes down and then comes back up, it makes a lower high, and then it makes a measured move here. As soon as it makes that measured move, you can put in the Fibonacci's and actually put an alert right here. Now, Thinkorswim has an alert. I don't know if all trading platforms have that, but you can put in an alert to let you know if and when it goes below 102.99. So you don't have to watch this all day. You don't have to watch this all day. An alert, which is really a cool thing. It'll come up on the computer. It comes up on my email. It comes up on my text. The US dollar Japanese yen is traded below here. Well, I know that's the point that I want to get out. And as soon as I get that alert, boom, I'm out. I go in and check the chart, but I'm not a chart, what do you want to call it? A chart hawker? I don't sit here all day in front of my computer. I got other things to do. I got a business to run. I've got grandkids running around. I mean, I got other things to do. I am not watching my computer all day. I am a professional trader. I know how to do this. Now, there's one other thing I want to mention to you, and that is, this sounds really easy. This sounds really easy. It is. It's simple. It's simple, but it's hard to master. It's hard to master. Give yourself time to play with this. Try it. Take a couple trades. Don't overextend yourself. That's the number one reason why retail traders lose, is they overtrade their accounts. Play around with the Fibonacci's, learn them, learn measured moves, learn the regression channel. I've been using these tools for, greater than 30 years. The first 5 years were kind of rough. First 5 years, I got my teeth kicked in a couple times. And I learned real quick that, one, I have a passion for the market. And two, I had to find some tools that worked and keep it simple. And that's what the way this really works. Now, the last chart I want to show you is my equity chart since 2019 and up until the present. This is the drop during coronavirus. You can see we're already recovered from that, and I plan to have a great 2020. And what you want is a strategy that takes you Steve says the proper term is a chart nerd. I don't want to be a chart nerd. What you want is a positive strategy that shows you a positive equity curve. Now, you got to remember that there's no holy grail out here. What I have is a positive expectation trading strategy. I have occasional losers. I have occasional losing streaks. But in the long run, I have a positive expectation trading strategy. Okay, a couple things I want to show you. I've got 5 more minutes, and I want to take you on a tour of my website. You go into www.optionsinfinity.com, optionsinfinity.com. We've been around. I've been doing this publicly for 10 years. Options Infinity has been in business for 10 years. Over those 10 years, we average about 75% winning trades. What I want you to do is go to optionsinfinity.com, scroll down here, and click on this button here to view a PDF that has the regression channel, the Fibonacci's, and measured moves, and it describes how I pick my trade size, how I look at the stocks to trade, the financially strong stocks and how I use those. Click on there; it's free. It's a great PDF. It's a blueprint of what I do. This is kind of cool. You can click on this. How does a mentor speed up your trading success? There was a book written one time, and the author escapes me right now. Let me see if I can see it up here in my library. No. But anyhow, he said that in order to be a pro, you have to spend 10,000 hours. And I'm going to show you exactly how you can drop that way down by picking a good mentor. Now, the last thing I'd like you to do is to join our community. It is a monthly fee. It's recurring. You can cancel at any time. When I see a trade that I'm going to make, either stocks, credit spreads, weeklies, monthlies, leaps, Forex, I'm going to send out a text and email alert. These are what I am doing. These are what I am doing. Then once a week, we have a meetup where our community gets together. I usually spend about a half hour teaching something, and then we go over our current trades. You get the entire master suite that shows exactly how I do trade stocks, how I do trade weeklies, how I do trade monthlies, how I do trade Forex. Okay, it's a great value. Now, if you want to know more, just go over to YouTube and type in Dale Brethauer, Brethauer, Dale Brethauer. And what you're going to want to do is scroll down here. This was a year ago that I gave this with Investors Inspiration. But here's a recent YouTube playlist that has 12 parts on exactly how I do trade. You can go to my channel. I've got over 26 videos, well, actually 26 videos with a lot of education in there. Just click on that and subscribe, and you can come right in there and see all the 26 videos of my teaching. And ultimately, what I'd like you to do is become part of our community. And I hope this was an educational webinar for everybody. Maybe I opened your eyes a little bit to the power of the exit.